Today's panel discussion brings us back to where we actually started from. The conversation whether Pakistan is on a right digital pathway, because when we talk about virtual assets, when we talk about digitization, the first question always remains that we're still a very cash dominated economy. 80% of the transactions still take place through cash. So we need to first address the real problem, which is the payments need to be done digitally for us to move towards digital assets. So this panel will address these points. And I would like to start with Bank of Punjab. Nofil Saab, thank you so much for being here. So, Nofil Saab, as you know, like Bank of Punjab, they have the government service account, they have a lot of pension accounts. But we see that there's a trend. A lot of these accounts end up these clients end up withdrawing that funds and spending that in cash. Why is it not the case that these people use their own bank accounts to spend that money? We see still huge lines on every first where people stand in queues outside ATMs and they're withdrawing funds to spend money in cash. Why are they not going towards the digital sort of?
Thank you very much, Khalique and Siddharth, for having me here. So first of all, apart from the government funds and pension funds, BOP is also the largest digital lending bank in the country. We are also the largest credit card issuer as well as debit card issuers. And we are also the fastest growing digital transaction acquiring bank in the country. We are also one of the largest banks with the branchless banking wallet infrastructure in commercial banks. So the context needs to be clear, because what I've just described to you is probably not for BOP alone. The entire industry in the last 10 years has taken significant strides towards digitalization of the payments infrastructure. The problem that you have perceived is what I call the classical holy grail problem, in the sense that while in terms of inclusivity of access, the industry has given a lot of tools, channels, and products to the consumer, it is the friction in the transaction, retail transaction especially, where the problem lies. And that's the holy grail part of it. If you look at the State Bank's quarterly numbers, all the metrics are moving in the right direction. The share and of the number of transactions and volume of digital transaction has been going through the roof, be it RAST, RTGS, or even P2P transactions. The problem is that when there is a choice for a consumer who is buying a bread for, let's say, rupees 400, the choice between taking cash out from his or her pocket or using a card or a mobile app, which may very well be in his or her pocket there as well, is still there. And that is where the whole merchant acquiring problem comes in. So the first point which I'll want to make is that while on the issuing side, great work has happened, it's on the acquisition side where a lot of work needs to happen. The good news is it's already happening, but the jury is still out. So that's one part. The second part of inclusivity, which sort of stops consumers from really going digital, is the logical next step of digitalization of transactions, which is credit inclusion. So what we don't see in our industry is that based on the digital transaction behaviors of consumers, banks giving credit to customers based on data scoring model. And that to us is where the real inclusivity lies. So between these two goalposts, which is one, removing the friction between the consumer and the retailer, and secondly, the banks going forward in developing credit scoring models based on the transaction behavior, I think a lot of friction is still there. As a last point, I also would like to point out to the audience that we believe that this is not for the first time that there is an attempt on digitalizing the transaction ecosystem in Pakistan. It started in 2008 with the advent of telcos and wallets, and I give full credit to telcos who did an amazing job in terms of establishing a huge wallet ecosystem, as well as the merchant base. I think we missed the bus because of the skewed incentive structure. The whole focus remained over the counter transaction rather than P2P. So I consider this attempt to be yet another attempt. I am very hopeful that this attempt would yield far more variable results in terms of digitalizing the whole economy, but there are chances of it going bad as well.
Thank you so much. We're lucky enough to have one of the telco slash fintech here, like, Atta is here from JazzCash. So, Atta, what is the reason that long tenure customers, they do not switch to or graduate towards savings, credits, or insurance products? Like, is there an issue of trust, or do you feel like their ticket size, it's too less to graduate towards these products?
Yeah. So, sure, I'll answer that. But I think there's a very interesting point being made there. Um, I think there's a position that we've taken in terms of the acquiring side as well as on the issuing side, wallets being the issuing side, where we believe the instruments that are now in the market in terms of payments as well as QR acceptance has taken shape to a degree where funds that are moving within the digital ecosystem is so much better off from the year before or the year before that. So JazzCash on its own, for instance, is processing ₹500 billion on a monthly basis through its environment. And that's primarily money in, money out through whether it's to banks, whether it's to payment gateway solution providers, or whether it's to investments, right? So let me just give you a sort of a sense of that. Compare March, I guess, 25 to last year's numbers. We've seen a surge of 36% just in payment gateway usage. We've seen a surge in 230% in QR payments. Now, I think it's not necessary, and I think, I mean, you makes a very good point about missing the bus because of the incentive structure or the arbitrage that existed. That's being taken care of with government intervention. But that sort of story ought to continue for us to really, so for this ecosystem to continue grow. Wanted to make a point on there. As far as your question goes, I guess the premise there is also a little sort of flimsy. We've seen savings and investments as a duo, QR payments or payment gateway, really sort of growing. And the reason that sort of is the case is because it's never been an issue of product gaps being in the market. It's always been progression as a whole, right? Do people interest themselves with savings through digital wallets or through banks? Compare that to gold holding or putting money into bonds or that sort of traditional sort of paper-based solutions. So that's really sort of taken a turn for the positive. And it's not necessarily regulatory in nature, but what's happened, for instance, very recently is Alif was here. We worked with him when he was still at K-Trade, is to create a seamless journey between our sort of environment and K-Trade's environment, so that they don't have to go through a 36-hour or 48-hour hop of doing a KYC once again, once they've already been acquired. Now, that's been naturalized at SECP's end as well. SECP has now given us a framework, a trust framework between financial institutions like ourselves and SECP-regulated insurance and investment companies, allowing our KYC to transpire to them under that trust framework so that there's no new KYC. So that time is essentially to be reduced to under an hour. So you're able to open a bank account. I think Bank of Punjab or all of the other banks would have to would see that coming as well on their end, and their customers enjoying that kind of journey as well. That momentum would pick up the moment these cross sort of regulated entities would find customers seamless sort of movement between two ecosystems. And so, as I said, it's not a regulatory issue, or neither is it that there's product gaps or innovation around this. It's just that transition between two environments has now been made technologically more possible, and there are trust frameworks that are being created that creates that or lowers that gap.
Thank you so much for your elaborate answer. Like the problem from what it seems is not on the issuance side, as Nofal Saab highlighted. It is more on the retail side. So we would like to hear from Adnan Saab. Firstly, briefly introduce what DigiKhata and DigiDukaan does, and how does it intend on fulfilling that sort of gap? Because you are the client-facing end of the banks like Bank of Punjab and other banks. Kindly please let us know.
Thank you. Excuse me. First of all, deeply honored and pleasure to be part of a panel where bosses like Nafasa is also here. So we work very closely with BOP. We're one of the few entities in Pakistan who actually focus on the merchants acquisition. DigiKhata is a simple Khata application, started off in 2020, and the idea was to penetrate into these small businesses to really understand them financially and serve them financially, banking products, saving products, etc. So that's what we do. We got roughly 1 million users of our application actively use us, and we work closely with them to acquire more and more merchants. We feel that we're one of the largest acquirer who have acquired just over the last 1 year over 100,000 merchants, and we made them start accepting digital payments. Professor very rightly said that acquisition is the problem, and the challenge is the cash actually. So it's very easy and very cheap for him to accept cash versus any digital payments, primarily because of the costings. We still offer payment products. It costs. It has operational problems. We work day in day out on how to overcome all those operational problems. The experience is not that healthy, not that easy too. One, two is like we also need to understand that what alternate benefits we are giving to those merchants to really adopt onto these digital payments. And to the face of it, I don't see much. Let's see which one product available for these small businesses in lending or in any other that helps him or motivates him to adopt onto the. So that's what we do. We're trying to solve that, and one keyword is lending. So cash flow is one problem that these small merchants face, and we would like to help them with that, embedding the lending products into the digital payment products, so they can really see that value and adopt more and more digital payments.
Thank you so much. So we have with us.
If you don't mind just being a little interactive, this is a very, it's a hot sort of a subject within the ecosystem, the merchant acquiring, right? Customers have been acquired, they've got, a good combined Easy Paisa, JazzCash, and the other EMIs included, I think, a good north of 90 million sort of registered base, as we put it. But merchant acquiring is hot, I think, unless that entire value chain is digitalized. We won't see momentum building up on the real digital sort of ecosystem, right? My take on and just on your point, merchant acquiring was an issue when there was when we had that kind of a pricing sort of a asymmetry. 1% MDR or 1.25% MDR was a high sort of a hop for merchants. That's been subsidized through Rust, right? So that was one. We've already made it interoperable. I think we've been enjoying this for 2 years, almost 2 years now. That also brings in footfall to merchants that are, that have been acquired by Bank of Punjab and JazzCash are transacting customers. So there's been a lot of, movement in the right direction. And then additionally, because of the data set that has been created, there are so many players, particularly NBFCs that we've encountered and worked with. We're one of those digital lenders on the merchant side as well. I think there are layers that are being built on that incentive structure that are keeping merchants for digital payments. But I just want to take your sort of opinion and position on this. Is that friction not? I mean, is that friction still prevalent? Why
Still does.
cash
So-
QR,
so-
right?
so we got
all of that incentive structure has sort of played in favor of digital payments at merchant locations.
Yeah. So look, we only call it a success when we actually compare to the reasonable or comparable
Cash
markets across, and primarily cash also. So roughly 5 odd million small businesses or businesses, retail, for instance. But how many of them we've actually acquired and they can accept digital payments? A fraction of them. The state bank numbers are not 300,000, 400,000, something like this.
I think we're doing a north of 1 million. Right?
We'll move on.
Yeah,
to-
okay, yep, sure.
Yeah. So to me, I think there's quite a lot of work that needs to be done. There are PSPs, banks trying to acquire as many of them as they can, but the problem still stays in the market is the merchant is not value is the value proposition is not provided enough that yes they'll start pushing it as their product to ask customers no pay me through a digital mean and not cash. So we have to break that barrier yet. We haven't to me it's not there. It's not there yet.
Thank you so much.
Fair enough.
Sharjeel, coming to you, Karandaaz played a fundamental role in the whole Rast ecosystem. Do you feel that just deploying that system has filled this inclusive gap, or more needs to be done to reach out to, let's say, women in far-flung area who do not have access to these cards? Like, again, even issuance is a major thing for them, let alone spending through cards digitally. Let us go.
So thank you very much again for inviting me to the second panel of this great summit. I've been hearing all the views and I absolutely respect all of them, and excellent progress all in all. However, I think as an ecosystem, and I'm not talking about the Karandaazes of the world or the banks or the regulator, we really need to get our act together if we want to make the most of what we have at hand. Rast is a piece of infrastructure. It is state of the art. I don't think anybody argues on that. It's instant, it's interoperable. As Nofal initially mentioned, a lot of credit goes to the telcos and the wallet operators, of course, for starting this journey in 2008 or 7, I think you mentioned. What I don't agree to is, and maybe it was just a casual use of the word, that this is another attempt. No, this is not another attempt. This is a very, very different attempt. This time, we have this piece of infrastructure which can process payments left, right, and center, totally agnostic of who is the participant. In fact, we should have broader participation. It should not be restricted to the regulated FIs only, which it is right now. But that's fine. That's part of the journey. State Bank had to scale it in a certain way. The key issue right now is when we have these discussions, and you've just observed in the last 10 or 15 minutes, we talk about the numbers of issuance and number of acquisitions. We are still not talking about the usage. If we talk about the numbers, I can very confidently and with evidence put some examples in front of you without naming names of institutes. It's a target scheme. We need to shift from a target scheme. A 30-day active is an active merchant. What Atta is saying is absolutely correct. Factually, he's right. There's over 1 million merchants that have been created in the ecosystem since last July, which is basically since the Prime Minister's Cashless Pakistan initiative came into being, and there was a lot of pressure put on all of the ecosystem players to chase these targets. July baseline was like 250,000 merchants in Pakistan. All of a sudden, we are approaching, I think, 1.5 million. But how many are active? It's going to be less than 15-20%. And even those active are one transaction in 30 days. What kind of a merchant does one transaction in 30 days? I don't have to talk about policy right now. There are a lot of things that we need to take very seriously head on. And then we will actually see the growth of digitalization of payments and the overall economy. The infrastructure is there, it's for public good. Pricing was definitely one of the barriers. The Prime Minister, the government, they announced a subsidy program of 3.5 billion rupees for the first year, where they said all P2M transactions done on Rast would not charge an MDR of over 0.25, and every such transaction can claim a subsidy out of the 3.5 billion rupees kitty of up to 0.5%, I think. So that has been done, some sort of incentivization. Value prop creation, very, very important. We need to show to the ecosystem what it means to them. Cash is still very convenient. Cash is super good in terms of experience. Our Rast transactions are there, but they're still not very convenient. You still have to scan a QR, you have to add an OTP and whatnot. It's not standardized. Experience has to be perfected. Value prop has to be shown to the whole ecosystem. Incentives can play a bit of a part. We all know incentives, as soon as they're plucked out, the numbers drop. But yes, that can absolutely help us, sort of give it more sustenance for a while. We have to attack this more systematically and more honestly. I mean to say, in terms of that, what is the reality? Let's not just chase numbers.
Thank you so much. Kamran, I'm coming to you. Allied Bank is one of the leading banks of Pakistan. Obviously, you would have studied different markets like India, which is way more ahead, like, far ahead from us when it comes to digital transformation. Sajjad mentioned QR codes. So, what do you perceive strategically these bigger banks? So, we understand, like, neobanks, BNPLs, they are going towards retail acquisition. They're more aggressive. But what are conventional banks doing actually to sort of, go ahead with digitizing their customers and, making it more convenient for their customers?
So thank you very much. I just want to add 2 cents of mine on this. So Sharjeel is absolutely right, spot on, that we have now million and million of QR in the market. But in actual, if you see the activation, it's a very promising number, 15-20%. What we have witnessed, it's probably less than 5%. And there's a huge emergence of P2P into P2M. So since the regulatory pressure is out there, so it's very easy for banks or the wallets to convert the P2P into the P2M. So, but what we feel is, and on the other side, the bitter part is, so far we have almost around 250 to 300,000 POS machines out there. But less than 5% of the merchants are contributing more than 90% of volume. So the product, this portfolio mix is not right. So we are like sitting on a ticking bomb. So it doesn't make sense. So what I feel is a couple of challenges. Number one, cost of doing business has gone up. I'm just talking from the perspective of the POS. QR itself, when it comes to the activation, the training, it's highly, I would say, highly human capital intensive thing. So the value, or you can say the activation cost goes so high, then probably going directly to the customer, we prefer, just going with the flow and keeping the customer over there and relying on that 7 to 10% transactions. And one of the biggest challenge when we talk about the strategy, the strategic intent, it's out there. But people who are selling it, what we call it feet on street, their resource capability set is not there. So being a part of this fraternity for almost 3 decades now, what I've seen is that we do invest, being a banks or being a big companies, from the perspective of a strategy or the product. But when it comes to the execution, it's the same conventional orthodox way we are selling it. So probably we are not able to create that value for the customer, which should, convince him enough to use that tool. So this is one of my takeaway. Another thing, what I feel is, which is probably a game changer, is that we have a strong Easy Paisa and JazzCash use case, where what they did is that they just nail to the need of the customer. We need to understand, being a Pakistan, technology adaptability is a need base. It's not a want base. So we are not West. So breaking the odd, we need to get into different use cases. Like if I share with you a distribution network, if you look at the process of a distribution network, the supply chain, it's whole manual, starting from order taking, deliveries, collection. This is whole manual process. Complementing our existing platform in terms of QR, in terms of POS, even payment gateways, we can build these strong use cases which can actually create a value for the customer. So this is how I see, and in fact, we being a bank are also working on these lines just to create a value for the customer. So the customer should find his attraction enough to build upon it.
Thank you so much. So we have with us Mahmood, who is CEO of Alif. Alif is a bank in different jurisdictions. First, let us know about Alif's experience in different jurisdictions as a bank, as a BNPL, and how you can play a role in Pakistan's system from what you've heard and resolving the issues as they've highlighted.
Thank you. And thank you, Khalique, for having me. Very quickly, if I talk about Alif, we come from Tajikistan and Uzbekistan, and Pakistan's the third market that we're entering. I think the one number that I like to talk about, which seems overwhelming, is at one point, Alif was processing 70% of the cashless transactions in Tajikistan. So this is an institution that's issued less than 10% of the cards, but we were processing over 70%. And I think it's not got to do with the channel, to be honest. I mean, we can talk about the channels, and we've got the right channels, we've got the right rails, we've got cards, we've got QRs, we've got all of that laid out. But a question that I heard us speak about here, and I think Nofal also referred to it, and the previous panel talked about it, is where's the value at? Where does this start becoming valuable for the merchant, for the consumer, for the entire value chain, vertically up and down? And I think that's where Alif played a significant role in those markets, both Tajikistan and Uzbekistan. BNPL is a great entrant. It's credit, it's easy to give, it's a decision you can make in 30 seconds. And in markets like these, and a market like Pakistan, where we are underwriting on really thin files, the reality is that the solution will have to come from the value add of something like credit. The beauty of doing this right is, yes, everyone looks at BNPL and says, hey, this is a product for consumer finance. You're going to create over indebtedness. We can have that conversation and debate it all we want. But imagine being able to walk out of that with an understanding of one company and saying, I now have the ability to hyper personalize for this merchant a credit product that isn't a 12-year tenor or a 12-month tenor, but a 3-day tenor. Just the ability to be able to do that with data is the sort of play that I think institutions like ours actually can do. We do need support from the likes of BOP and the likes of Allied Bank and JazzCash to be able to really do this at scale fast. But that's where I think the gap exists at the moment. So hoping to contribute to that.
Francis, what role can a virtual asset company play in resolving these issues? You've heard from Bank of Punjab, these are the issues of a traditional finance. What role can a VAS play in resolving these issues?
Yeah, and first, thank you very much for Lumps for having me. This was a great summit, and I appreciate the opportunity to be here. And yeah, I think also touching upon a lot of what's been said, and I just wanted to also add one point, is that everybody is talking about how let's say, how would you make a digital process, a digital payment more convenient? How do we get people to start adopting so that it's not cash-based? But if you take an experience, for example, GCC, Kenya, Mozambique, Uganda, where there's a lot of mobile money, similar to like a JazzCash, call it M-Pesa, Momo, MTN. There's also the other side of the equation, which is not why is digital payments more convenient, but why is having cash inconvenient? Yeah. And a lot of these countries have taken decisive steps to making cash inconvenient, which might be an unpopular statement, and it might be very difficult to process or put in place. But if you're in Nairobi, you land in the airport and you're trying to pay for your parking and you leave, you cannot pay for anything in cash. It's just simply not allowed. You need to use an M-Pesa account or you need to use a card. And that brings its difficulties in every single different market. And I don't pretend to be an expert on Pakistan. This is my first time here, even though I've done some research. But every place has its difficulties. And I think when it comes to digital assets, crypto, stable coins, whatever it is, I think you can see very clearly in Pakistan, I think the number is 40 million people that already have crypto wallets. They didn't do it because, clearly there's nobody here trying to push crypto wallets because regulation isn't there yet. But they did it because it was probably not even it was more convenient, but it just actually hit the bottom line. And I think if you take that into account, crypto, whether it's the clear use case that we've heard all day today and yesterday was remittances. How do we make it a lot cheaper to move money from point A to point B cross-border? And similarly, and maybe crypto doesn't have so much to do with it, but a JazzCash or another payment system accounts moving intra-country from point A to point B, like Lahore to Karachi. We have RAS, Instant. So all of these things definitely exist. We're, I think, just on the cusp where now digital assets can start making things even more convenient, let's say, cheaper, and actually give people that ability to make their lives better. And I think that's where digital assets comes into play. And we have to, get on that bandwagon now because there's already 40 million people using it. Yeah. So the more people that we can get to adopt, I think the more things we'll find out that we don't have exact answers to right now.
Thank you so much. Nufil Saab, coming to you. If I were to say, what one or two steps can the regulator, state bank, take in the next 12 to 24 months to fix this exact issue that we've mentioned, what would those be? You're from the banking industry. You understand what the problem is. Firstly, is there something the state bank can do? Say, and what would that be? Or is it a market problem in terms of, is it a problem of the population? If it is, how do we fix that?
So it's a state bank problem because it's a banking issue. Because you see, we sit on both sides of the transaction. The consumer is our customer as well as the merchant is also a customer. So it's fundamentally a banking issue and hence the state bank. The good news is the state bank already has done 3 tangible things which are going to add to removing the friction and increasing the offtake. The first one is that this whole, which I think a friend from Karandaaz was mentioning, the MDR issue, because it is a genuine issue for banks because there is a cost attached to it. And with the intervention of the federal government, especially on the RAS P2 MQR, although we do have some reservations on the other MDR regime, but that problem for right now has been solved in the sense that now it's a zero fee transaction for the merchant. So that's one which it has done. The second thing which State Bank is doing already is that on the digital supply chain financing, as a thematic push, they've already been at it for the last 3 to 4 years. And I think that this is one which Adnan also mentioned, and our friends also mentioned here, because that's where the real value for the merchant will lie. I'll come to the channel again, but that's the other thing which the State Bank has put in place. Now, what I'm happy about is that they've done it already, but what I'm worried about is that not many banks seem to be very excited about going into this domain. We don't see much movement going into there. We have been particularly aggressive towards this segment, working with fintechs like DigiKhata and some of the other names where we welcome their whole network of merchants to our through our open API networking credit part. So that's the second thing which State Bank has done. The third thing which State Bank has already done is in the mention of RAST is that, you see, RAST was developed as a payment rails. It's a payment rail. It's not a macroeconomic tool. It per se is not going to encourage or discourage a merchant to start using it. So what State Bank has recently done is had redone the architecture of the governance of the RAST company, put in the banking people on board through PBA. And that's where we believe that now there is going to be an alignment towards the banks, the channel, and the product, leading towards more growth. So these are all the right things which needed to be done and which State Bank has already done.
Thank you so much.
Sorry, can I just
Please.
pick up on that? So I think Naufal talks about some great things. One other thing that the State Bank has been actively doing, which we as fintechs are particularly keen on, is the open banking framework. I think that opens up a whole lot of opportunities for the likes of us, should the banks be interested. I add that caveat over there intentionally, should the banks be interested. So even though this might be mandated, even though it might be slogged through despite some banks that don't want it, the real opportunity will come where this becomes available to the consumer and institutions like ours. Because this is actually a decision between us rather than the bank. And they're still holding on really tightly because when you take that power away from them, they're going to say no. I think there are some exceptions. There are banks that are very open to this, that are actually working really hard at making sure they are contributing to the digital economy as a whole by participating with organizations like DigiKhata, hopefully ourselves. I'm already hinting, but I think that will become a significant game changer. Again, the question, and we spoke about this right now. All the channels exist. And there might be incentives for more of this, and disincentives, like you said, not necessarily a popular decision. I think we really have to work hard at creating more value in using the digital, right? If I'm doing 90% digital transactions, I it shouldn't just be based on my preference. Like, do I have cash or do I have my wallet or do I have my phone? It's if I keep using my phone for 3 months for payments, I know I have a credit card from BOP. It might be a 20,000 rupee credit card, but I know I will get it if 90% of my transactions are there. Or allied, ready to partner with everyone.
So, yeah, I would
Yeah.
like to hear your thoughts.
So, just to answer you, Yuri, should the bank will do it or not? I believe this change is inevitable. Either they get into these kind of collaboration, or they will stay behind. So, being allied, we are already into it. We are already in talks with a couple of fintechs, because the primary reason is it gives you, first of all, it will increase your bandwidth, your outreach, it will improve your time to market, and above all, the cost of doing business for banks standalone is not possible for these segments. So probably by joining head with the fintechs, we can create that platform which can give a win-win proposition for the both parties. So this change is inevitable from my perspective.
I'll just add one point, actually a couple of points. On a lighter note, it shouldn't have to be inevitable. You should be embracing this shift where fintechs are actually out there to collaborate, just on a lighter note. But absolutely, I mean, this is one of the best things that State Bank has recently started to push forward. They opened the sandbox. They have, I think, out of 6, there's 2 entities in there, including, I think, DigiKhata, who have tried out open banking. So that's good. That has to be done. I mentioned earlier, it has to go beyond FIs, financial institutes as participants. One important thing that we have not touched upon so far, we have talked about the value prop. I totally agree, and I mentioned that as well. In Pakistan, one of the biggest barriers, hindering the pathway to greater adoption has been the lack of basic financial and digital literacy, and most importantly, trust. A very recent research piece done by a professor at LUMS and IPA and a professor from University of Sydney has also revealed same results, which are already out there, but they have once again revalidated them. The biggest factor which is stopping people to use digital payments in Pakistan is still lack of trust. We all know how many frauds and what shapes and forms the fraud is taking every day. State Bank and we as Karandaaz are we have basically convinced State Bank, and they're already convinced, but we need to push forward with that agenda as a top agenda item, where a fit-for-purpose fraud detection and management system has to be put in place. It cannot continue to be an isolated sort of a responsibility of the banks. A grievance redressal mechanism has to be in place. If I'm a RAST user, if my transaction goes wrong, I shouldn't have to call my own bank. There has to be a central mechanism, and that mechanism has to own the issue. That's not happening right now. The frauds are evolving every day. So a lot of campaigning is required, a lot of systematic changes are required in that space. Then the value prop, then the cost. These are the top 3 hurdles that we see out there, proven again and again by research and surveys, demand side, supply side, all of that.
Thank you so much. So, for the last 2 days, we've heard blockchain is synonymous to trust. So, Francis, if we actually implement blockchain, like the State Bank is willing to do that, do you feel from what you've heard, will blockchain address these gaps?
I mean, I think it'll definitely help on a lot of different avenues. I think for general, like from Alif, BNPLs, if everything were on chain, you can then start to, you mentioned thin file. People don't have a lot of data behind them. You don't understand, are they going to be able to pay back? So there's no credit, right? You have this credit crunch. And if that were all on chain, you could automatically score things. You would understand merchants, how much money are they making, where's it coming from, and you'd be able to extend this credit. Not only that, but then you could also take it one step further. You can package this credit, you can potentially sell it, and so that would just all make things much more palatable, and it would also bring down the cost of capital because it would bring more capital to the system, more people trying to take on this risk. And I don't particularly know if it's Sharia compliant, but I think that blockchain could definitely bring a lot of value in that.
A lot of blockchain.
I think so.
So it
So-
could definitely bring value in that. And apart from that, I mean, remittances, we've all heard it a million times. It's going to bring everything down, blockchain, make it faster, make it cheaper. So it's a no-brainer. And just to touch also on the open banking thing, something very interesting that happened in the UAE was the central bank had not come up with a framework for open banking yet. And we saw a lot of fintechs that were using a lot of ingenuity, and essentially they were screen scraping the pages of the banks, providing protocols for which they kind of reverse engineered an open banking and made it available to people. So similar to how PVARA still hasn't come out with a regulatory regime and people still have wallets, something very similar would eventually happen. And I think it's because it does bring value in, instead of these payments going over card schemes, they now start going over RAS, make things a lot faster, cheaper, and things evolve, and eventually blockchain will be a part of that.
Thank you so much. So we're just running short of time, but in the last 2 to 3 minutes, and Adnan, Atta, and Mahmood, we're lucky enough to have two commissioners from SECP, and they're your regulators. So can SECP do something to?
love SCCP.
So just in 60 seconds. So it's being recorded anyway. So for 60 seconds, just let me know, as they've highlighted the SBP issue. Can SECP do something in terms of tiering of NBFCs or promoting more fintechs?
Oh, we're starting with me.
Yes.
Like,
Sorry. So, by the way, I think the SECP is a fantastic regulator. We had a lot of issues that they helped us manage, and that in comparison to some of our earlier conversations with regulators was particularly unique. Others we couldn't engage with the SECP. We've had a fantastic engagement, so I think they're really spot on. Where I feel like the SECP could potentially assist organizations like us, fintechs in particular, is we very often play on the edge of legality in terms of creativity, what we can do, what we can't do. And that's where the space exists, where the innovation exists. I'll give you a very simple example, by the way. I don't think products in Pakistan are where innovation is going to happen. Whether it's BNPL, whether it's leasing, whether it's insurance, whether it's saving products, they exist around the world everywhere. There's nothing unique. Underwriting and hyper personalization is where innovation is going to happen for fintechs. And I think the SECP really needs to open up to making that space available for data to be available to us. And until they do that, the creativity that we want to bring to the market is kind of restricted.
Thank you so much.
Just that.
Atta, your 2 cents on this.
right. So just this, I think, a small correction there. SECP isn't our regulator, but we
Of a sister
are.
concern.
Huh?
Of a sister concern.
Yeah. So, but that's still SABEC, right? So, but we are working with partners that have SECP angles. So all those investment companies, AMCs that we're working with, insurance companies, we're working with NBFCs as well. So the interesting part is they've allowed financial institutions to be regarded as data sources, whether it's customers, whether it's the information that we keep on record, to be equally recognized as an authority for their own licensed entities, right? So to us, that seamlessness is where the entire value sort of resides, and it's to our benefit as a financial institution. So I think they've done a marvelous job in the past 6-8 months that we've been in dialogues with them ourselves. I sort of agree that as I said earlier, there are no product gaps. I think that progression hasn't necessarily happened. And we've sort of witnessed that the moment sort of State Bank, subjected cash in, physical cash in at retail agents to biometrics, people are smart enough in Pakistan to go to a QR merchant, scan their QRs, get a cash out, or P2P, and then consider that as cash in. So they're smart enough in right there. So it's not financial literacy, it's not digital literacy. It's just that how do we best, as financial institutions or fintechs, hold that money in the environment where there's value proposition being created, right? And we've already discussed for 1.5 day as it ends today, that the value proposition, the layer two, the crypto sort of layer, is where we're already eyeing. Things are going to sort of accelerate and grow from a value proposition standpoint, where they talk RWAs and tokenized assets. But we're already doing it in the fiat world as well, right? So whether it's investments, as I said. I'm again, I love SCCP as well.
Thank you. Thank you so much, everyone. Thank you so much, everyone, for being here. We have a very important discussion by Dr. Muneeb at 5. So,
Guys, can we please have token of appreciation for our wonderful panelists? Dr. मैं आपको ज़हमत दूंगी दोबारा से